Welcome to Stock Talk with Nico Kritikos. Today we are going to be going through all the different stocks that are related to the semiconductor chip manufacturing industry. And so what I did here was I created a graph going through the market cap, the PE, the price to sales, dividend, share change, EPS growth, revenue growth, balance sheet, the 1-year price action, return on invested capital, and the profit margin. Now, it's important just to realize right off the bat how important it is for these companies to get our chips out there. That's why the chip shortage right now is hurting us so bad, because products, every type of product from a car to refrigerator to computers to Xboxes, everything needs a chip in it to function. And so that's why this is such a big industry. So if we scroll down here, we can see that in 2022, the expected global semiconductor market revenue is expected to hit $575 billion. That's just how big this market is. And last year, Taiwan Semiconductor Manufacturing did $107 billion worth of revenue, which gave them a 63% market share. So it's just good to keep that in mind, that Taiwan, they are the biggest in the world, not by market cap, but by market share and sales. Because if we look on this graph, we can see that by market cap, it's actually Nvidia. And that's really just because they are trading at a higher valuation. But the other thing I did here was at the bottom, I put the winner for each category. And the places where this gets misleading is with a company like Intel that is actually looks attractive on some metrics, and then on other metrics it looks awful. And so Intel was one I bought last week when it dropped down to $48, and then a couple of days later I sold it at pretty much at break even, because as I looked further into it, even though they are one of the biggest players in the world, their earnings are expected to go down 30% next year, and that's not something I wanted to be a part of. So if we look at other things, like for the market cap, I put Nvidia as the winner of this category, just because they are the biggest. The other thing would be like, so the thing to look out for here is, just because, let's say, so Intel is the winner of the PE category because they have the lowest PE ratio. Okay, you're paying the lowest price to earnings. However, that's for a good reason. It's trading at a cheap valuation because nobody wants it, because their earnings are going down. So that's why I wouldn't want to be a part of that company. I've owned Skyworks back in the day. Back in 2019, I made some money, probably a 40 or 50% gain off of Skyworks, because I was buying it at like $60 or $70. And I owned Nvidia multiple times. I just traded Nvidia this past summer, and because I was up like 50% in the matter of, I want to say, 2 months or something like that. So I sold Nvidia. I thought it was overvalued, but it's run up so much since then that I kind of wish I didn't sell, and now I want to get back in. So there's a little bit of an issue with that. But for the PE ratio, I put Intel because they are the lowest. The second lowest would be Skyworks, which is also an attractive valuation. But that's the problem with Intel and the valuation is it's cheap, but it's for a good reason. Now, for price to sales, it is Skywork Solution, or no, it is also Intel here. It's also Intel. They have a 2.5 price to sales compared to a Skyworks as a 6 price to sales. All the other ones trade extremely high. You can see some AMD trades at a 10, ASML trades at a 16, Nvidia trades at a 26, which is insane. Nvidia is overvalued any way you look at it. I think it is overvalued. It is probably my favorite company on here, but it's still it is overvalued. For the dividend, I put Intel again because they do pay the highest dividend. For share change, once again, Intel, and that's because they have the biggest share buyback program. They took 3% of their shares off the market in the past year, so that's helping out the share price. For earnings this is for earnings per share. And by the way, for the PE ratio, that is a forward price to earnings. That's not their trailing PE. Next up, we have the EPS, and the winner of this category was AMD, because AMD is expected to grow their EPS 27% in 2022, which is a lot higher than some of these other ones. Like a Texas Instruments is only expected 4% EPS growth. How I said Intel is expected to lose 30%. And then some of these other companies also have very strong numbers. Taiwan, 20%, ASML, 22%, Nvidia, 13%. Those are also strong. For revenue growth, we have Taiwan. They are expected to do 30% revenue growth, which is just extraordinary, especially considering how big of a market share they already have. So it's good to see them growing at such a fast pace too. For balance sheet, most of these companies were good. They pretty much all got A's, besides for Avgo, which is the company's Broadcom, and then ASML. And those were the equity was just not looking good. They were losing equity in the past couple of years. What I grade the balance sheet off of is a couple different things. One is, are long-term ratios or long-term assets higher than long-term liabilities? And preferably, I want it twice as many assets as liabilities. And then same thing with current assets and liabilities. I want my current ratio to be at least a 2. And so it's those two things, as well as a growing equity. So in other words, I kind of look at it from has the equity been growing over the past year, as well as has the equity been growing over the past 3 to 4 years. And I do kind of prioritize its past year performance, just because I think that's a little bit more relevant. But the criteria here is, are they growing equity, as well as do they have a healthy ratio between their assets and liabilities? And AMD is the winner of that, just because if you go and see how fast they've been growing their equity over the past couple of years, it's incredible how much they managed to grow that. Next up is the 1-year price action. There's 2 ways to look at this. You could say we want the price to go down because it's going to be cheaper, but you could also look at it and say, okay, the success of the company has caused the share price to go up, so that's great. And if we do it off of that metric, then it's going to be ASML, because they've had 123% returns on their share price over the past year. Now, if we look at it from the standpoint of which one is dipped down the most, it'd be Intel again. And Skyworks has also had a little bit weaker of a year. And I think if we look at Skyworks now, we can see today it's kind of, let's see, I think it was suffering pretty bad today. Oh, it looks like it rebounded, but it was $155 a share or something, I think, at some point today. Now, if we go back to this, we can see return on invested capital. I think this is one of the most important metrics you can utilize. And as we can see here, there's some extraordinary numbers from these companies. Most companies do not put up return on capital numbers of 40, 50, 60%. Those are high numbers. So normally I'm looking for 15% and above. But so for this one, it's AMD again. This is just crazy. 56% return on invested capital for AMD. That's how they're growing their equity and their value of their company so fast. So AMD does an amazing job. Second place is Texas Instruments. They're doing a great job. Then we have ASML, we have Skyworks, and then we have Taiwan. So that's another important metric to consider there. And finally, we have the profit margin, which, as we know, is extraordinarily important too. And this one is going to be Texas Instruments with a 41% profit margin, which is, again, it's incredible how they can manage to pull that off. And so 41% is insane, but Taiwan's 38% is also fantastic. Nvidia's 32%. These are all, anything around this 20, 30, 40% numbers are all great. So that's what we have there. I'm not a financial advisor, keep that in mind, so do your own research. But if I was going to pick one of these, I want to say I really like Nvidia, not only because of how strong their profitability is, return on invested capital, their balance sheet, their growth, but also because of how they're building out things in the metaverse, and they're involved in a lot more stuff. I love AMD. AMD is an incredibly strong company. I just feel like the bottom line here is, for these strong companies, you're going to have to pay up for. They demand a higher premium for these companies. So it's almost better. You don't want to buy too cheap of stuff. It really seems like if you're buying these cheaply valued companies like an Intel, you're pretty much paying for garbage a lot of times. And so that's what you got to look out for. I think Skywork Solutions is a very interesting one because they have very strong margins and ROC, and the stock has not gone up nearly as much as some of these other ones. 10 and 12% EPS revenue growth, those are good numbers. Those are not bad. And the valuation is not high. The valuation's of 14. I mean, for a forward PE of 14 in a company that's going to do 10% earnings per share growth, that's not bad at all. I don't see that being, I think that's a pretty good deal. But AMD is very strong. Taiwan, they have so much market share and power that I think that's an excellent one to own. However, I do think that it's not at a great valuation. I think a price to sales of 11 is kind of high. A forward PE of 20. I mean, when I look at Taiwan, I always say I want it under $100 a share, because if you look at the share price here, it's been pretty steady around this $115 mark for a while. And so let's see, it peaked out at 138. It's had some dips to 108, but it's just, if you look from over the past year and a half, it's gone from, $50 a share to 138. It's almost tripled. And so that's where I just see it as, I kind of want it under 100, but it may never get down there because it's such a powerful company in a strong position. So who knows? That should be a strong company to own. I really want Nvidia. If Nvidia drops 20 or 30%, I do want an Nvidia in my portfolio. And that's really it. I would say Texas Instruments is also strong. It's just their EPS and revenue growth is looking kind of weak. It says 4% EPS growth for next year. That's not that great considering the price you're paying for it. So I would say Nvidia, Taiwan Semiconductors, and AMD are your three strongest. And then wait for a 20 or 30% dip in those companies. If that ever happens, you might have to settle for a 10% dip, but those are the three strongest companies in my opinion. So I'm curious what you guys think. Which ones do you guys think is the strongest company? Which one has the most growth, and which one has the best valuation? So let me know down below, and I will see you in the next video.